Welcome back to the second half of the Future Show. Now less than 60 minutes away from, that's just 1 hour away from the cash open for stocks on Wall Street. Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy, joining us to talk commodities this morning. Scott, welcome. Happy Tuesday. Let's begin with crude oil and the move up that we've seen recently, back up above the 50-day moving average. Bid activity as we're seeing the indices kind of get back on track a little bit this morning as well. Talk to us about what you see ultimately in the cards for the WTI as we've come off the $62 level. Do we have the momentum to retest the October highs up around 85?
There's certainly a lot of upward pressure, a lot of tailwinds here. You've got tight supply. You've got kind of, I don't want to say that Omicron is waning, but you've got the demand really still there, even in the face of Omicron. And now, you know what? You've got some geopolitical events also in Libya. You've got some outages there that's causing a little bit of pressure here. So I'm not looking maybe for 85 or those highs that we saw, but there definitely are some tailwinds here, and I think that any sort of pullback then should be bought in the near term here. Down the road, 2 months, 4 months from now, don't know what's going to happen. And obviously the whole wild card to all of this is what is OPEC going to do here? We still don't know. They have this agreement in place that they are going to increase production, but are they really going to?
Yeah, well, we've been hearing about that in terms of the capacity to do so. You mentioned Libya, some of the constraints as they've brought production offline, some maintenance issues, I think it was. Here again, we are looking at the 50-day moving average. So again, I like that. Prices possibly supported by current conditions, and there are a lot of factors to consider. You mentioned a handful of them, but not necessarily accelerating to the extent that we'll see the loftier levels that some of the Goldmans and such have been calling for up and through this 85 level. I think it was 100, 125 ultimately they had said we would see again. So a bit of the bid coming back into play. Let's talk a little bit about the metals here, Scott, because, well, we ended our last segment with JB talking about the U.S. dollar and this kind of level-headed approach that we've seen towards all of this speculation about rates and ultimately the global narrative as well. Where will some of the other central banks lie and fall as we kind of try and get back to this normal levels or situation and taper and ultimately get back to, again, something that's a little bit more realistic as far as the Fed's influence on markets. But talk to us, because gold, again, holding around the 50-day moving average and hadn't really budged much in many ways. It has been somewhat supported by some of the geopolitical events you mentioned in terms of Russia and the Ukraine playing out. But again, for the most part, it's just continues to have, as I've been calling it, a very level-headed approach towards some of the speculation, some of the uncertainty that investors, markets in general, have exhibited.
It has been, and that 1,800 number has been, pretty much a magnet here. I'd be a little cautious here, because I think the reason that it is holding is because of some of that volatility we're seeing around Powell's testimony, around, what is the Fed going to do? And as some of that wanes, whether the news about the inflation is good, bad, or indifferent, but as some of that volatility around these announcements comes out of the marketplace, I think that's actually a negative, a bearish sign for gold. So I'd be very, very cautious to the upside here. Also, quite frankly, the upheaval, the turmoil, the volatility that we've seen in the stock market over the last week or so is also lending gold to holding a bid here. So I think, again, as some of that calms down a little bit, and as we get maybe towards a little bit of that normalcy that you're talking about here, I think that can hit gold. I really do.
Well, we've been seeing a series of lower highs as we've come off that 2100 pandemic all-time spike high. And, well, as I look at the chart, a series of higher lows in many ways. It's a little bit more well-defined on the downside. Scott, what does all this mean for copper right now? If rates are on the rise, is the Fed going to be able to kind of navigate that fine line and balance the demand, the economy growth kind of discussion here? I mean, are they going to be able to get this right, or are they going to dampen ultimately some of that demand through kind of slowing economic conditions ultimately?
That's the $1 million
question. Yeah,
they're going to get this right. you look at what they have done, and I was actually very supportive of what they had done up until a few months ago. I think that, they handled the crisis very well, but it sure seems like they don't really know what the correct move is and what the right move is, which is adding to that volatility in the marketplace, which obviously is affecting many of the metals, copper included. So I don't see that, really going away anytime soon here. And also, what's really going to happen with rates, what's really going to happen with home building. We know how copper is so tied to that, sector. So I think we're in for more volatility, and I think we're going to be very range bound for the near term.
Copper, looking at that chart, it reminds me a lot of the Russell. Similar to gold right now. Both have, all of them, so three I should say, have pretty well-defined upper and lower extremes at this point established. Scott, tied into the inflation discussion and, U.S.-China relations, demand and economies doing well, boom or bust, ultimately you have grains. I've seen a nice move up ahead of the WASDE report this week in beans. Have you anything notable there in terms of some of the price activity and anything worth commenting on?
There has been a nice move up, and it's interesting because the outlook, the expectation for the WASDE report is that yield estimates are expected to be like, one of the best ever, maybe the second best ever for corn, for soybean. And so, what's really going to happen here? So after this report comes out, everyone's going to look towards the U.S. prospective plantings for 2022. Again, I think there might be some pressure in the space, and in the rallies that we've seen here might start to get hit if these reports actually come to fruition. Yeah,
I want to pull real quick, give me a second, in terms of taking a look here at the grains and just talking about trend. And, it's not the most heavily traded product, but here you can see, again, the move up that we've looked at over the last few weeks in the beans. It got down below the $13 level, but here you can see back up to $14.15. And just a quick look in terms of where things stand as far as the 100-day moving average here, and, back again to 14, up and through that level, convincingly back up and through that level right now. Scott, ultimately, we were talking about the relationship or the dollar impact or lack thereof in terms of gold, the level-headed approach that we've seen earlier in the show. We were talking about the relationship with the dollar and rates. Let's talk about commodities and rates, because, again, when you're talking about the TNX on the rise, you're talking in theory about crude oil on the rise. They oftentimes track each other very closely, and I guess it sort of ties into sort of getting back to the data, and are we going to see numbers continue to support the Fed's initiative to sort of get back on track and normalize, and ultimately crude oil will be a reflection of that, and probably a reflection of what we're seeing in rates as well.
Absolutely. And, the dollar relationship with commodities and rates with commodities, there's obviously historical trends to look at. And I think that 2022 is going to be a much more challenging year for commodities because, across the board, global central banks are tightening policy. We know that's going to happen, whether it happens in a month, 2 months, 3 months. That is the landscape. So I think that sets up for, a more challenging year, a very difficult year for commodities. But again, we have the wild card of coronavirus and what's going to happen. We really don't know. We know what we hope to happen here, and we hope that, demand just surges because, the virus has gone away, but we really don't know what's going to happen there. And it'll be very interesting, but I think overall it's going to be a challenging year.
Well, we don't know what's going to happen there in terms of demand. You were talking about supply in terms of OPEC all earlier. Rates, the unknown. You've got Omicron. There is just, again, you were talking earlier about all the factors to consider if you're trading energies and some of the fundamentals there. Lastly, Scott, Bitcoin. Let's talk about the wild card there. Recently back down below the 40,000 level. What are you watching in terms of crypto?
That was a very big psychological number. I'm not so sure it was, from a technical standpoint, a big number to watch. It was a very psychological number. And we may have seen some, little bit of capitulation yesterday when it dipped down below 40 and touched, the levels that it did. I don't think there was a massive capitulation, but I think that number was a number where some of the on-chain holders said, all right, enough is enough. That obviously has been a huge move down with what we've seen with rates on the upside here. Personally, I think this move that we've seen in the 10-year and rates overall, Ben, has been a little too far, too quick. I expect rates to calm down a little bit. I'm not saying they're going to back off. And I think that could be a very good positive for Bitcoin, at least in the short run.
We're looking at the 5-minute, 5-day right there. You can see some of the selling that came into play here. Now we have the 1-minute time frame up, so you can see the move up off. Again, I mentioned briefly below 40,000, and it certainly seems like the makings of a V bottom if we can build on this right now in Bitcoin and the indices. Last but not least, I just wanted to point out, well, actually two things quickly. The move off of 69,000. This is that all-time high into those most recent levels below 40,000. But as you look at the bigger picture here, you can see how we're kind of in the middle of this range right now. We've got a well-defined lower, a well-defined upper extreme. And Scott, you've given us a lot to keep an eye on and watch into the next couple days here. Everybody's going to be glued to their seats here and screens watching Fed Chair Jerome Powell this afternoon and, well, markets in reaction to. Appreciate you sharing part of your Tuesday morning with us. Scott Bauer, thanks to you, the CEO of Prosper Trading Academy.